Good morning, traders. TGI Friday or TFI Friday, depending on what sort of week you had. Thank God it's Friday, or thank F it's Friday, which I'm sure is the feeling that a lot of you have today, given the week that we've had in the markets. It's Friday, April the 22nd. James stepping in for Steve. Apologies if you can hear some barking in the background. My dog Winston. I'm working from home today, and he's up and around. It's Friday, April the 22nd, from a wet Chicago morning. 70 degrees and sunny yesterday. It was like a summer's day, or a sort of an early summer's day here in Chicago. And I've woken up this morning and it's wet and well, it's not too cold, but it's wet, miserable. Anyway, yeah, TFI Friday. There was one day this week where I looked up at the risk management platform for where I can, have a quick oversight of all the trading activity across all our traders. And every single trader that was on the evaluation challenge and every funded trader that was trading that day was red, in the red and down, every single one. I was like, oh man, what a terrible day to be trading. And it's actually pretty rare to see something like that. Usually there's what we tend to see on certainly very volatile days, or there's been sudden moves in the markets, or um, days where the market moves in one direction only. And what we see there is traders, as the day unfolds, let's say the market's selling off. Some might go short initially, some might be long initially, got it wrong and covered those positions and maybe gone short. So there's been some good trading intraday, but as the market sort of drives down in one direction, everyone starts to develop this bias, this expectation that there's going to be a bounce. And so we see more and more people starting to hit sort of like fading the trend or countering the trend, and looking for the pullback. Um, and that's very, very natural to do as a trader, and I do it myself. But on those days where there is no pullback, is the days where we tend to see a lot of red across the board. But it is rare that we see every trader red. Occasionally, there will be groupings on difficult days, but some people will have got it right, or at least made some money and managed to hold on to it. But I think it was Tuesday. I looked up and everybody was red, and I was like, "Oh man, that's terrible." And this morning when I woke up as well, so I get up about sort of 5:15, 5:30 a.m. Chicago time, and we obviously have a lot of traders trading the night session. And I look. First thing I do is check the risk, and a lot of red on the board this morning. So maybe not TGI Friday. Thank God it's Friday. Maybe more of a TFI. And I'm glad this week is over. In the news, two things. The two main themes that have been dominating, and I feel like will be dominating for quite some time to come now, is Ukraine. A mixed bag out of Ukraine. In fact, it's actually not that much. Russian generals said that Russia aims to extend control over the entire south. This is after Russia making gains in the east and taking, I think it's 40 villages. But hey, a village, how much resistance can a village put up? Zelensky says it's just delaying the inevitable, which is, Russia will ultimately have to pull out of Ukraine. But, a bit of posturing on both sides. I don't think there's anything happening on the ground in Ukraine that we're not expecting. But what's driving price today, or what the focus has been certainly overnight, is the Fed Chairman Powell, at an IMF-hosted panel, became a little bit more hawkish on interest rate hikes, on monetary policy. And Powell reiterated that he has a bias for aggressive rate hikes. And immediately we're seeing the market. I mean, it was already there for May, pretty much a half point hike in May, but half point in June, now possibly July. And I think it's one of the Let me have a look here. I might have read it in an article somewhere. Maybe Nimura, one of the Japanese banks, are actually talking about a possibility of 0.75, three quarters of a percentage point hike in three quarters of a hike in in May and June. Now, obviously, that's just their opinion, their analysts' opinion. But the Fed turned a little bit more hawkish, and we've seen this kind of like flavor this week from central bankers. And on that note, today, what we have to watch is this: we have Lagarde for the ECB speaking at 9 o'clock New York time, and we have Bailey at 10:30 New York time speaking for the Bank of England, and see if they're going to continue that theme. Interestingly, what's going on at the ECB, according to this Forex Live news story this morning, is that there's been a leak saying that Christine Lagarde has told policymakers to hold back on criticism and dissenting views on policy decisions for several days. The move comes as Lagarde is said to struggle with the vocal dissent from more hawkish members and persistent leaks about internal debate within the governing council. So, essentially what this story is saying is the governing council, the ECB, which is the European Central Bank, right? The council that sets interest rate policy, monetary policy for the Eurozone, has an official line. But of course, there's going to be debate amongst the ranks. Are they being too dovish or too hawkish on their approach to handling inflation in the Eurozone, which we know is not as much of a problem as it is in the US, but it's creeping. And do they hike rates sooner rather than later? Should they be more aggressive? Of course, there's going to be a debate, right? But what you tend to get is a sort of an agreement, and this is going to be our official policy. But it seems here there is a lot of disagreement, but it's not just disagreement. People have been very vocal from within the council, like, no, you have this wrong. We need to be more hawkish. We need to be more aggressive with our rate hikes, or communicating to the market that we're going to be hiking rates and dealing with inflation. And if you're not going to say it, then I'm going to leak it to the press. Right. So we're getting a little bit of dissent within the ranks. It doesn't really mean much in terms of the stability of the ECB, but what it indicates to me is that there is a lot of pressure on the ECB to become more hawkish on rates. And I think we might see that today with Lagarde speaking. I mean, she said, hold off on a few days. What does she mean by this? Is she telling her dissenting members, look, I'm going to communicate something over the next few days? Right. And now we know that she's speaking officially at 9 a.m. New York time. So we need to keep an eye on that, because I think that this is going to be her opportunity to shift the official line to a slightly more aggressive or hawkish view on monetary policy. And we could see the ECB signaling that borrowing costs are likely to move up in the second half of the year, maybe even as soon as June and or July. And that'll be the first time interest rates move since 2011. So we've got like central bankers around the world, like thinking, inflation's not transitory. Yeah, we know that. It's more of a problem. Yeah, we've been telling you, come on, do something about it. And they're realizing that they really need to, become more aggressive. And that is putting a dampener on any kind of recovery we're seeing in the stock market. Of course, the ongoing geopolitical issues in Ukraine, and political issues. The war in Ukraine is also constantly bubbling away in the background. But the main focus, I think, at the moment is inflation, and this sudden sort of like quick pivot to being more hawkish in the last sort of 24 hours. And I think in the next 24 hours, or certainly in the next sort of 5 hours or so, as we move into Bank of England Governor Bailey speaking at 10:30, I think we're going to see the weekend, as we go in the weekend, it's going to be very difficult for the stock markets to end in the green. So we covered Fed, covered the Ukraine. China's the other one I wanted to touch on this morning. China's had a bit of a rough week. COVID lockdowns have continued to slow economic growth, and any sort of policy stimulus that the Chinese government's trying to sort of implement hasn't really been seen to be enough, or it's fallen short of expectations by investors. So China's had a bit of a rough week. Check the Hang Seng this morning; it's actually hanging in there. The Shanghai Composite, do we have? Let me see if I have. Yeah, I have the stock markets here. Just a brief summary. So let's have a look, see what's going on. Shanghai Composite is unchanged broadly and small up on the day. The Hang Seng small off. All right, so the Hang Seng's the Hong Kong market. Shanghai is the local Shanghai market. So that's kind of it really on the news front. Going back to the daily calendar, we've had some manufacturing PMI, and as we move into the United States, is trading day, we'll have our manufacturing PMI Purchasing Managers Index. Essentially, this is a survey of purchasing managers, and what they kind of, I'm guessing the type of questions they're asking them is, what's your expectation of activity over the coming month, and what has it been? Generally speaking, what we're seeing is kind of numbers. If you look here, we've got the European PMI coming slightly better, and the British PMI slightly worse. We can see this by immediately looking at the color green. See, so the forecast is 55, coming at 57.9. Here, manufacturing PMI, that's Germany, manufacturing for the Eurozone, forecast 54.7, comes in at 55.3. And you can see the UK is coming slightly worse, but look at the forecast, they were higher. So the way PMI is calculated is we look at 50 as the baseline, and anything above 50 represents an expansion in the economy. Anything below 50 represents a contraction. So anything above 50 is good, but remember, it's always about where the forecast is. So we're kind of slightly disappointed in the UK, but actually the forecast was higher here. See, 59.7, 59 and 60, whereas in the Eurozone and in Germany, it was in the mid 50s. So if you actually look at the numbers, they're pretty much in line: 58, 55, 57, 57, 58, 55. So you could argue that actual PMI across Europe and the UK is pretty much in line with each other. Numbers slightly disappointed in the UK, and slightly better in the Eurozone and in Germany and in France. Really, it's PMI. It's kind of important under normal circumstances. I think the focus today is on what the central bankers are doing. Our PMI numbers, we have the expectations 57, 58, 58 coming out here, and but again, overshadowed here really by not a US central banker, but remember, the central bankers, inflation's a global problem. It gets more in developing economies, in developed Western economies, it is very much intertwined, but it does obviously get quite more localized, as in it's more of a problem in the US than it is in Europe. But nevertheless, the central bankers are talking, communicating, working together, trying to figure out, how the global economy is going to evolve over the next period, and and what their sort of approach will be. And sometimes that's coordinated, sometimes it's not coordinated, it's done in a vacuum, but it is always done with an eye on what's happening elsewhere in the world. So okay, if you're not trading US products and you're not trading UK products and European products, it's still important to see what sort of tone is going to come out of Bailey and Lagarde. If they aren't extra hawkish on inflation, because I think the market's starting to price it in, right? So if they aren't, then we could see a little bit of a turnaround. when they speak. If they don't mention that they're becoming more hawkish, or I don't for a minute think they're going to sort of actually say, inflation's the perception of inflation is worse than the actual and what's happening, and I'm actually more dovish. I don't think they're going to say that. I think the risk today is they say nothing. They don't become more hawkish, because the market is pricing in now a more hawkish view than what was up until sort of yesterday, the official line on interest rates. So that's kind of it on the data front. Got some Canadian numbers out later. I'm just having a look through here. Yep. So it's definitely the PMI in the United States, and then the two central bankers will be the focus today. News overnight in London. This is the Reuters sort of headline: stocks strike 5-week lows on rate hike view, and lockdowns hit yuan. Just on the currencies, so we mentioned that China's sell-off. The yuan's been under pressure because of this lockdown and this really sort of lack of decent policy stimulus has disappointed investors. And the dollar's strengthening as well across the board. And I think I've got an article up on the dollar, which we can just have a quick look through. So Federal Chair Jerome Powell said on Thursday that a half-point interest rate increase would be on the table when the Fed meets in May, adding it would be more appropriate to be moving a little more quickly. All right, so that was kind of what he said. Those are the words that he used in this overnight meeting. Nomura now expects a 75 basis point hike at the Fed's June and July meetings. They would be the biggest since 1994. Perhaps a little too hawkish in that analyst's view, but we never know. European Central Bank officials said on Thursday that the central bank might start hiking Eurozone rates as early as July, while Bank of England interest rate setter Catherine Mann said the borrowing costs will probably have to rise further. So this continuing hawkish tone, like a more sort of nervousness about inflation, I think it's going to rattle markets today, particularly going into the weekend. Let's have a look here. We looked at the stocks, Forex Live. There's not much on the headlines. The only thing I pulled out was we have a couple of people trading currencies, but it's always worth understanding as well what the currencies are doing, and how that potentially could impact the products we're trading. Dollar, again, the front runner on the session. I think the pound's under pressure. This is basically because of the expected increase in interest rates, making it more attractive to hold US dollars. More sluggish, higher yields, stronger dollar, and more sluggish equities seem to be the name of the game in April, and not much will change before the FOMC meeting on the 4th of May. Euro USD is pinned down to 0.3% to test 108 again. Here we are. This is meanwhile the pound. They call it cable. That's like a colloquial term for the pound versus the US dollar. Pound is in free fall, broke. It's 1.3000. The next day, key support is 50% retracement level at 1.2830. Yeah, not good news for my UK investments that I might one day eventually be bringing over to the US. That is about it in terms of news. We looked at Lagarde asking her fellow policymakers to hold back on public criticism and leaking. Let's have a quick look at the charts, and then we'll wrap it up with just a final thought for the day. Start, as we always do, with the E-mini, the most popular product traded at trade day, and a barometer for the US, the health of the US economy in general. We can see clearly we're in a downtrend. Big down day yesterday. The first level of support is the low from, was that the beginning of the week or was that Friday? I can't even, I'm losing track of time here. So if you're on Tradeovate, you can go to the data box, you see, and you hover over it, and we can see the date, the 18th. So the low of the 18th, I think we're going to test this today. We're going to head down to this level of support. It doesn't really look like much of a level of support. to be honest, there's really not much on the way down now to stop it extending the lows. I would be really, really, really surprised if the market finds the uh, finds a bid and finds the strength to come up and test this downtrend and breach it today. My feeling is, we could be, with lack of any sort of real news, we might be in for an inside day, sort of consolidating around here. If I'm going to take a bias, I'm going to be slightly bearish into today and look to head down to this sort of 43. Um, where are we here? 43 sort of 20 level. And it could come down all the way down to here. Well, I doubt it's going to come down to it. That would be a huge sell-off on the day. I don't think we're going to get there, but certainly down towards this 43.20 to test this level of support. Here we are. This is it on the hourly chart. Let's see if I can pull that in a little bit. We can see what's going on here. So we've got this lovely downtrend. 1, 2, 3, 4. This was a very difficult period. They're very difficult to trade here because we not only did we sort of test this level of resistance, we broke through, took out a few stops, I think sucked a few longs in, and then it just collapsed. And as I said, as it started to sell off quite quickly, I think this must have been where um, Jerome Powell must have started talking. I'm assuming overnight what happened is a few people started to buy it around sort of these levels, and got stopped out because from the sea of red on the screens this morning. A small consolidation period ahead as we go into the trading day, the US trading day. As I said, if it's going to go up today, it's going to struggle, and it's going to really, really, really struggle to sort of break this level of resistance and this downtrend. My feeling is the whole thing is going to be softer going into the weekend, unless there's a positive news out of somewhere. Of course, keep your eye on the news headlines. But given the background of the central bankers being more hawkish, I think we're going to hear Bailey and Lagarde say the same things. Going into the weekend, I think it's just going to drift off here and come down to this 43.20 level of support. In the NASDAQ, same kind of thing here. This is the daily in the NASDAQ. It's been trending down. Let's put that, draw a line on there. Okay, in the NASDAQ, we've been trending down nicely. It's been pretty tricky to trade the NASDAQ. This is the overnight sell-off, breached this level. There's a small uptrend there, breached it, nice clean sell-off there. But again, it wasn't as easy as that when you're actually trading it. Particularly these moves in the night session where the market can be thinner and less liquid, and these markets, you can be sort of like quiet, tight 5-minute ranges, or these are hourly ranges on this chart, and then boom, 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 breaking like levels of support here, catching you, trying to sort of counter the trend and trying to sort of capture bounces that clearly didn't happen here and clearly didn't happen here as it sort of broke through. So we're looking for it to sort of trade down, between sort of, I would say today, let's have a look. Let's do a horizontal line here. That would be my level of resistance, level of support, looking to trade around here, maybe drift sort of lower. Treasuries, nobody's trading treasuries at the moment, but they are just this unbelievable sell-off as yields continue to rise, fueled again by Jerome Powell today, last overnight, talking about an increase in rates quicker than the market's expecting. And then oil, we seem to be sort of consolidating at the moment in this sort of wedge shaped pattern, this triangle shaped pattern. I can't really see much happening in oil today. I certainly don't see it sort of breaking up above 108.50 and sort of breaking this sort of uptrend here. Sort of breaking, let's call it like the 100. It's just below 100. There was the last level of support. But it's kind of like 199. Oh yeah, 99.50 to sort of 99.90 levels of support. What's the data box say that low is there? 99.88. So 99.88 to sort of like 99.50 50, 51. That level of support there, I can't see it breaking below that, and I can't see it breaking up, to be honest. I think we're looking for sort of further consolidation, maybe a sort of more small bearish bias in energy. And that's it. Short meeting today. Short for me anyway. It's 6:55 a.m. here in Chicago. So I'm going to wrap it up with a thought for the day, and I'm going to talk a little bit about mental health, because I think it might be important after a week like this week and a night overnight. I was due to have a mentoring session with one of our traders who's in the UK. He's coming to the end of his day, after this meeting, I was due to have an hour's session with him. He's actually taking a week's holiday. And I think it's really good to take breaks. And particularly when you've had a bad week, there is this sort of natural tendency within us to, not want to take a break because we're down money and we can't afford to take a break, or we want to fight to get our money back. And, I don't think it's ever easy to make a decision to take a break. It's, when you think about it, certainly for me, when I was trading, it was always like, well, if the markets were quiet and I wasn't really doing much trading, well, I hadn't really made any money, or I hadn't made much money, so I didn't want to take a break. And and it might get busy. And then when the markets were busy, I obviously didn't want to take a break. Or if I'd lost money trading, I didn't want to take a break. And it never seemed a good time to take a break. And I remember somebody early on in my career telling me, look, James, the only thing you bring to the table when you're trading, the only thing that's the one thing that you need as a trader is not your physical ability, it's your mental ability, right? It's your mind. And your mind needs to be well rested and in a good place for you to be able to make good trading decisions. And I never forget it. And I've tried to live by that and teach that. And, I just wanted to sort of mention it today because it has been a really difficult week trading. We've seen a few people blow their accounts, and I know I can feel the frustration out there with the markets. And if you're kind of in a bad place mentally, today might be a good day not to trade for you, right? It might be a good day to sort of like, you know what? I'm going to take Friday off. I'm going to relax, spend some time with the family, go and do something that I enjoy, and just sort of kind of have a nice long weekend and come back next week fresh. It's really important, as I said, to be able to come to the table with a fresh, clear mind and start your trading day in a good frame of mind. And talking of starting your trading day, one thing that I brought into my trading some years ago, quite a long time ago, so about 15 years ago, and I don't do it every day, and I wish I did. Some days I just don't have time. I mean, I'm not trading that much at the moment because I'm just too busy trying to run trade day. But um, when I am trading, I should do it every time I trade, and I unfortunately I don't. But when I do remember to do it, it does help, and that's to have what we call a mindful minute before the trading day starts. Now, if you're not familiar with mindfulness, I suggest that you Google it, because I won't be able to do it justice in the next sort of 2-3 minutes. But just in short, it's almost like a putting yourself in a meditative state where you just close your eyes, try and clear your mind, breathe, take a few deep breaths, relax your breath, inhale in through the nose, out through the mouth slowly, and try just to quieten the mind 1 minute, just for 1 minute before you start your trading day. And what it does, I mean, there's loads and loads of research on the internet to prove that, that this is just not, it's not hocus pocus. This is not Harry Potter. That, mindfulness does help people think clearer, make better decisions, make quicker decisions, and just sort of perform at a better level. I mean, you see it in the world of professional athletics now and professional sports. Just get people gathering themselves before they go out to perform, taking a few minutes to clear their mind, to lower their heart rate. Because it could be quite stressful situations, right? Going into the trading day or going into an economic data release. Lower the heart rate through deep, slow breathing, close the eyes, try and still the mind, and just take a minute. And they're all on YouTube. There are tons of videos on how to do the practice. So I encourage you to go and check it out and see it. And just as a follow-up anecdote, when I moved to Shanghai to help build a trading group there, um, I was working in the trading room and sitting on the trading floor. We had about sort of 40 odd traders when I first got there, and sitting on the trading floor, surrounded by these traders, and and very quickly I noticed, when the markets were busy and people were stressed, people were banging on their desks and forgive me for any Mandarin speakers here, but yelling watch out, and banging on the desks. And I kind of reached over to one of my colleagues and said, well, what's "war chow" in English? And he kind of smiled, and he was reluctant to tell me, but eventually did. And basically, it's "f you," you know. And it just made me smile because I was like, God, I've sat in dealing rooms for like 15 years, and when the markets get really busy and people get caught in positions and they lose money, a typical trader's reaction is to ball up their fist, smash it down on the desk, and go "fuck you." And it was interesting to see that sort of trading behavior had no cultural boundaries. Didn't it was trading behavior without borders. And I'm sitting in a trading room in Shanghai, and some Chinese traders that have never been to the West, recruited fresh out of universities, never traded anywhere else, were exhibiting the same behaviors as traders in the West. So so I was like, one of the things I did there was, I tried to introduce a daily ritual. So we had a daily ritual. I asked the traders to come in 20 minutes, 25 minutes before the market opens every day. We would sit in a room. I'd stand at the front of the room, do pretty much what I'm doing to you guys now, which is run through any sort of news stories overnight, anything that's in the focus in the news that's likely to drive price throughout the day. Quick look at some levels and share some sort of trading stories and things. And then what we did is we introduced this sort of mindful minute. Everybody goes back to their desk, and 5 minutes before the open, everybody closes their eyes. We had a yoga instructor come in and teach us how to do this practice for a few days, and left us to do it. And we would instruct everybody to have this moment of silence in the trading room, this deep breath, this mindful minute, and and before the trading day started. Now, anecdotally, it led to an increase in P&L. Now, but the thing about that is, you cannot absolutely attribute that to the mindful minute, because the markets might have been just more friendly and more busy and stuff like that. But if it was a coincidence, it was a great coincidence, because it kind of like reinforced the behavior amongst the traders. What I did actually notice, which I think is more objective, is sort of less banging on the desk. That sort of less levels of stress, and then and occasionally what happens is, as the day evolves, individual traders get caught in positions, and then they might come up to me and I'm caught, blah blah blah, and I can see the tension and the stress in them. I was like, okay, before you go back to trade, take a deep breath, count to 5, close your eyes, clear your mind, then go back at it. And I just want you to share that story with you, because I think it really does help. It does help manage the stress. And circling back, what you're bringing to the table is your mind and your ability to make good, balanced decisions. And when you're losing money, when you're under pressure, when you're caught up, and when you're stressed, it's very hard to do that. And one thing that might help you is just to take this sort of mindful minute before the trading day starts, And if you find yourself moving back into that stress, that anger zone where you're banging the desk and shouting, watch out, uh, maybe take a moment then as well. Say, hey, okay, if it was me, I'd say, hey, James, what's happening here? Close out the position, walk away, go for a walk around the block, come back, sit down, breathe, switch the screen back on and continue. Right. I hope that helps. I hope that helps you in your trading. That's my thought for the day, Friday, April the 22nd, wrapping up the meeting now. I wish you all a great trading day and a great weekend ahead. Good luck.